Hi there YouTube algo traders. In this video I'm going to explain not 1, not 2, not 3 and also not 4 trading algorithms. No, this time I'm going to present you the results of 5 trading algorithms that are called Elliot. And their results range from great to spectacular. So this is a video you might not want to miss if you're really interested in a new trading strategy. Each of these algorithms use the Elliott wave oscillator as their base indicator. However, they all differ from each other when it comes to detailed settings of parameters, use of additional indicators and rules. Showing and explaining all 5 strategy Python files including their results is way too much to pump into a video of about 10 minutes, so I'll stick to just some explanations of the gist of each of these strategy variants, and then I will show you the results of the backtests I did too. But before we begin, let's first show you how you can find these strategies. Some are a little bit hard to find, but most of them are available on GitHub if you do the correct search query, like the Elliot v3 and v5 example you see here. So you see, it's not hard to find these on the internet. Now about the strategies themselves. Unfortunately, I cannot tell who the original author is of these files, but in any case, all kudos go to you, my friend. Now let's begin with the settings you can find in each of these variants. For that I will open the version 3, which seems to be a good starting point for beginners. All versions are using spot-only trading, and this seems to be the choice of the main developer here. And all versions also use the same base strategy class structure, and all implement the Elliott wave oscillator, hence the name. Also in each version the 5-minute time frame is used with a 1-hour informative time frame, and all use EMAs for buy and sell signals. Now about the Elliot v3 983. The fundamental structure and core indicators remain the same across all versions, but where this version starts to differ is its following settings. For example, the Elliot v3 has more aggressive ROI and stop loss settings. And while it has configured a lot of indicators in the populate indicators method, it only uses a couple of them in the basic buy and sell rules for the strategy, without any additional safety measures or other enhancements. The strategy will buy when either of these two conditions is met. In condition 1, the current price should be below 97.6% of the 21 period EMA, and the Elliott wave oscillator is above 3.9, indicating strong upward momentum. The RSI should be below 41, and there is trading volume. In condition 2, the current price should be below 97.6% of the 21 period EMA, the Elliott wave oscillator should be below minus 19.3, and there is trading volume. The strategy will sell when the current price is above 101% of the 96 period EMA and when there is trading volume. Now besides the sell signal ROI and normal stop loss, there is also a stop loss configured that activates when the profit reaches 1% and trails at 4.9% below the highest price reached. It only activates when reaching the offset. The strategy is based on the idea of catching strong momentum moves while protecting against large losses. But it's more aggressive than later versions, which have added more safety features and confirmations. The Elliot v4 984 represents a more conservative and balanced version of the strategy compared to v3, but it doesn't include the advanced features found in v5 and version 7, which I'll show later. For me it looks to be a parameter optimized version of v3 with a more conservative approach to risk management. The ROI and stop loss are less aggressively set, although I personally do not mind a more tight stop loss, and the buy and sell rules are almost similar to those of version 3. The strategy will buy when either of these two conditions is met. And besides this all, it also uses the same trailing stop loss settings of that of the Elliot 3 version. Now this next version is the Elliot v4 changed, and this version I will briefly mention because this is an almost similar version of that of the other version 4, except that it's essentially a more conservative version with a tighter stop loss, more conservative trailing stop loss settings, slightly different entry price threshold, and furthermore I think it's an identical strategy. I think the developer here tried to reduce risk by making a tighter stop loss and take profits more quickly with the trailing stop. It starts to get more interesting with the Elliot v5 version. Here, new modifications have been added to the algorithm to make it more sophisticated. For example, the developer added new risk management and trade execution features while maintaining the core strategy's principle. It also seems to be more suitable for real-world trading conditions due to its slippage protection and better risk management. The slippage protection method monitors actual slippage on trades and retries trades up to 3 times if the slippage is too high. It calculates how much worse the actual trade price is compared to what we wanted, and if the trade price is more than 2% worse, it cancels the trade and tries again up to 3 times. So you see, it only accepts the trade if the price is within our acceptable range, here minus 2% or better. If not, then the trade is cancelled. Now this dynamic stop loss is a system that becomes more protective as the trade becomes more profitable, helping to secure gains while still giving the trade room to breathe. It adjusts the stop loss based on how long we've been in the trade and how much profit we have made. If we're in profit, it tightens the stop loss to protect our gains, and if we've hit our profit target, it sets a very tight stop loss to lock in the profits. But unfortunately, this custom stop loss is not activated in the algorithm, so the outcome is not influenced by these sophisticated rules. The exit confirmation is the last method that is called before the order is placed, and it can be called when certain expected conditions are not available. It's like having a final safety check before selling. And in this case, it checks if the current price is in a good position between 2 moving averages. But if the price is in a bad position, too high or too low maybe, it prevents the sale. It also checks for the slippage and retries the sale if the price is too bad. And furthermore, this version also has different order types for buy and sell, better fill price management, and a somewhat more sophisticated trailing stop loss system. The Elliot V5HO looks to be an optimized version of the earlier discussed V5309. However, some of the more advanced exit signals are not available in this version, like the slippage protection and the HMA-EMA exit confirmation. There is no sophisticated exit confirmation used, and the custom stop loss is also disabled in this version. But the main difference here seems to be that the V5HO seems to be optimized for more aggressive trading with higher profit targets, while the V5309 is more focused on risk management and consistent profits. And we will see later in a few moments which of these two versions has the highest potential for future trading gains and wealth keeping. Now the final version of these Elliot strategies is the Elliot V7392, and it's the most advanced version, and it clearly shows that there is an evolution in the way these strategies are created. In this version 4 there are more additional technical indicators used. Also, new informative 1-hour timeframe indicators are defined, and these will be used in the entry rules of this algorithm later on. And these are also used in the buy conditions. And then in the sell conditions, another exit section has been added for more sophisticated exit rules. Besides these major differences, this algorithm does not have those intelligent slippage protection, custom stop loss settings, or the exit confirmation. But then again, this version looks to be more designed to only enter when multiple timeframes align, and exit quickly in weak trends, hold longer in strong trends, protect profits more effectively, and reduce false signals. So I think that this version shows significant evolution from the previous versions, particularly in its use of multiple timeframes and more sophisticated exit conditions. But now you might wonder which of these versions has the highest probability to make money in the crypto markets. Which has the best trading rules to enter and exit trades quickly and will not lose much money when markets go downwards. Let me only show you the main results and the equity curve and drawdown plot this time. For a more in-depth analysis, you can always go to my Patreon site and download the full reports of all these tests to see which version is more suitable for you, your risk appetite, and your style of trading or pair selection. Now the first version that I want to discuss is the Elliot V3. And as you can see, this version scored better on the 15-minute time frame than on the 5-minute time frame on which these settings are made. This version has a hypothetical profit of over 5,000% with a win rate of 65% and a drawdown of 11%. Kalmar, Shortino and Sharp have very optimistic numbers, and the amount of pairs that favor this algorithm is 89%. The equity curve shows a good upward trend. Only at some point there are sudden drops in equity, which immediately are spotted in the drawdown curve below. And these are trades that suddenly went bad after entering and probably have hit the target stop loss that this version uses. But all in all, a good start for the V3 version. But then we come to the V4984 Elliot version. And this one shows an even greater hypothetical profit of over 10,000%. Again, be aware this is only a backtest and not a guarantee that these numbers will also be reached in the future. There are too many variables that come into play when using this on your setup that will prevent these numbers in the future. The win percentage is lower than the V3 version, and also the drawdown is higher. But then again, the amount of trades is also, now let's say 3 times higher, which might indicate overtrading in this case. And lastly, the 15-minute time frame seems to be better performing than the 5-minute time frame. Even on the 30-minute, the algorithm seems to perform better here. Now the combination of the equity curve and the drawdown plot also shows that this version has more variance. It seems to be that this version lacks filtering out the bad trade, and therefore there is a more jagged equity curve here. But then again, it also catches more good trades too, so there seems to be a trade-off between a more stable curve and lower gains, and a more jagged curve and higher profits in the end. The Elliot V4 changed seems to be a trade-off between this more stable curve and a more jagged performance. Its end result is also somewhere between the V3 and previous V4 version, with a hypothetical profit of over 7,000% and a drawdown of 13% and a profit factor of 1.39, it sits somewhere in between. This is also clearly visible in the equity and drawdown plot. It is not as jagged as the other V4 algo, but more looking like the V3 plot, with less drawdown spikes that are also not reaching that low over the backtesting period too. The Elliot V5 is another version I discussed, and this one has a performance that is comparable to the V3 version. The gains are less high, but the win rate is higher, and in combination with the lower drawdown and profit factor, it eventually scores higher. Kalmar, Sortino and Sharp ratio are also agreeing with this less risky but stable performance too, and until now this is the only version that actually scores the best on its intended 5-minute time frame here. This is even more visible if we watch the equity and drawdown plot. The developer has found a way to produce a very stable performing strategy with the added rules in the code. The curve gradually creeps upward while catching some big bumps along the way, so it seems that it detects momentum trades and does not exit these prematurely, catching the full trend and thus most of the gains here. Now other smaller trades are steadily increasing their account balance over time, and when the overall market goes a little bit more bearish, then this algorithm seems to keep the gains better and does not overtrade, where unnecessary risks are taken and cause drawdown. This is clearly visible in the more flattish periods and the lower drawdown results overall. Earlier we saw that the Elliot V5 HO did not have the sophisticated exit signals and slippage protection enabled and seemed to rely more on optimized parameters. And we can clearly see that here because a very high performance has been squeezed out of the market, and I cannot deny that we can clearly see an example of curve fitting in this case. I have my doubts that the same performance will be likely if we're going to use this version in the actual market as well. It also has another cost because the drawdown is also much higher than the earlier versions, which I think is a result of trying to catch more moves without the advanced exit mechanisms. My assumption here is that the developer has optimized the 5-minute time frame, but in the end these settings were suited better for the 30-minute time frame, because this scored the best. You could have guessed how the equity and drawdown plot should look like here. A 45-degree equity that shows only one way, which is up, with some hard stopping moments as well. Your risk appetite might like this kind of performance curve, but be aware that these performances are very speculative and there is no guarantee that this will be achieved in the future as well. So you are warned. And finally we come to the performance of the Elliot V7. Again, this performance is somewhere in between the other performances. It's not the highest scoring version, but it has a very acceptable number with a 4,600% profit, a 73% win rate with a 1.5 profit factor and only a 11% drawdown. All of this on the 15-minute time frame. Its plot seems to be a mixture of the V5309 and the V4984, somewhat jagged but also losing momentum in performance after the top of last year's bear market. Its total gains are even not higher than the V5309 here. The drawdown is higher and lasts longer than the V5309, and honestly I cannot say anything that makes this version stand out of all the other versions I earlier discussed. So I think I will go to the conclusions of this exercise. At this stage the votes are in and the best scoring Elliot strategy version seems to be the Elliot V5 HO that performed best on the 30-minute time frame. And even the 5-minute time frame scored higher than the number 2 in this hypothetical exercise, the Elliot V4984. However, there is a big but here, and that is that I suspect that these high scores are the result of hyperoptimization, which means that its parameters are highly adjusted on the data on which it's trained. I compared this by taking a test where you already know the answers of. Future tests with unknown questions will make you score very bad because you did not make the effort to study the foundations. And personally, I like the performance of the Elliot V5309 better because of its steady inclination, but also because it seems to be managing losing trades much better than any others. My style is risk avoiding, and I'd rather let a trade pass than take it if I'm not highly sure that it will be a winning trade. And if I take the trade, then I take great care in risk and money management. But this is just my personal style of trading, and it might greatly differ from yours, of course. And this is actually the lesson I want to give to you. There are many trading strategies and algorithms, and each trading strategy might have its own parameters and settings, which can influence the outcome of the strategy's performance and predictability greatly. We have seen this here with the multiple versions of the same named algorithm. Of course, you can download and try all of these files as well on your own trading setup and see if these results match your style of trading. But stay aware that backtests are only an indication of the possible future performance and that there is no guarantee whatsoever that what I've shown here is also possible in the future. But if you do use these and have a good result and can attain a nice profit, then that's absolutely great as well. Then I'm happy that I inspired you to try one of these out and it also really worked out for you. And this is my only intention, to make you aware of what is available and what is possible in this field. Many thanks for watching this video, for clicking the like button, subscribing and your nice comments. And I will see you in the next video. Goodbye!